Interest rates are on slow but steady decline, but the difference is so small that you might not even notice. Here to tell us what this will do as far as affecting the market and what rates could be in the immediate future, real estate agent Jim Bottrell. Jim, good morning. Good to see you.
Good morning.
The interest rates have changed since you and I sat here and talked last.
Yeah, they've come down a little bit. We've seen interest rates go from, if you want to go back into July of 22 or something like that, 8%. We're seeing stuff down in the low sixes now. The difference is really, it's been happening such a gradual change. We haven't seen any dramatic differences in the market. Sellers that are sitting on those sub 3% interest rates, they're still not giving that up for something, to buy something maybe fits their needs a little bit better. In the low sixes, they're still not doing that. It's still not quite enough to get the buyers to get off the sideline and come forward. So it's still just a very slow market overall.
Okay, but what do you think, mortgage rates as we progress toward the end of the year? Changes?
So do we expect there to be changes? Well, we keep hearing about the Fed talking about they're going to be lowering interest rates as we go through the rest of the year, right? We've been hearing about that. The thing is the Fed funds rate and mortgage interest rates are two different things. Fed funds rate does lead the mortgage interest rates, but they're not dictated by. So if the Fed funds rate does go down as we go later on in the year, will that impact mortgage interest rates? I'm going to say probably not very much, because what we have seen is we've seen mortgage interest rates come down, but the Fed funds rate has stayed stable. So if the Fed does start to drop those rates, I think that mortgage interest rate is already priced in. So I don't see us changing too awful much. We might see a little bit of a change before the end of the year in the mortgage interest rates, but I don't see it being a big thing that changes anything.
But when you hear that interest rates are coming down, that's not necessarily time to refi if you have to.
Well, you know what? So let's talk about the refining. So interest rates have come down, and people are saying, is anybody really benefiting from this? Because I said that the real estate market really hasn't changed yet. Yeah, there is actually a huge benefit to people who bought homes, let's call it in July 22nd up until really just recently, because we know housing prices have steadily gone up. So those people who bought those houses in anytime from July 22nd till today, or July 2022 until today, that they paid less for that house than they would pay for that same house today. So they're up in equity, good for them. Right, but they paid higher interest rates, some as high as 8%. Mm-hmm. So what they have been doing is all those people that have those interest rates between 7 and 8%, they have been refinancing. And that's one of the big things that's awesome about mortgages, is you get an opportunity to refinance your loan and actually bring it down. So mortgage rates, everybody gets a 30-year fixed mortgage, which means that for 30 years your payment doesn't go up. Small changes here with escrow and your insurance and stuff like that, but small, minimal. Mm-hmm. But it doesn't go up. However, you can bring your mortgage payment down, refinance into a lower rate, your cost of living goes down. That is an advantage that people who own a home have that renters do not. Renters don't understand that, they just look at the cost of that rent check and compare it equal to dollar to that cost of that mortgage check and think, wow, the mortgage check's way higher, I'm not going to do that. That mortgage check is made up of a lot of things that really do some cool stuff, like principal reduction, tax benefits. But then again, you can actually make that payment go down. Rents, I've never seen rent go down. Have you?
No.
It goes up without limitation forever. Yeah.
So the overall market, any significant changes coming, do you think, in the next 6 months or so?
No, I mean, this is my 5th election cycle, and in the industry. Mm-hmm. And every time you get within 90 days of a presidential election, people will literally say, yeah, we're not moving. We're just going to kind of hunker down. We're going to wait to see what happens after the election. And what's funny is after the election, they end up doing what they were going to do anyway, regardless of who wins. So I've always thought it was a little silly, but it doesn't really matter what happens with mortgage interest rates right now. What we're seeing is just an overall slowing of the market, and it has everything to do, in my opinion, just from my 5th presidential cycle in this industry, that it has everything to do with that. People are just hunkering down to seeing what's going to happen in this election. This is a doozy. This is a weird one. So we're seeing that happen.
All right, Jim Bottrell, appreciate the update, man.
All right, thanks.
Always good to talk to you.